look, we're going to stick to the bullish analysis here on the S&P 500. There's a couple of things that we do know here that I just want to reiterate. We've got buy support here and here. Now down in this price area, when prices have probed just below this horizontal line of support, there has been buys that have strongly come into play here and pushed prices higher on both occasions. The most recent one has been the most impulsive bit of upside price action we've seen for some time. So that all bodes well for things continuing to the upside here. Yet we still do have reservations. Prices have started to stall. Now in our last review we were expecting prices to retrace this initial run to the upside, and the 50 to 61.8% retracement zone was looking at 1158 to 1184. Now where prices did tag here and again buyer support came in was right on 1157, so that was just right in the pocket of our typical retracement zone where we were expecting prices to head, the deeper end of that side of our targets. Yet buyers did come straight back in, and then we had another piece of impulsive price action to the upside here. So what we're proposing here now is that we're having a 1-2-1-2. So this is basically our intermediate wave 1 and 2, and then we've got the potential for a subdividing wave 3 or C to the upside occurring here now. Now the typical retracement zone for this run higher is right here, and the very critical price area is 1200. It's a psychological price zone, and it also happens to be the 61.8% retracement of this little run to the upside here. So if we are subdividing to the upside via a 5-wave move, this is what we'd be expecting, something along these lines: a wave 1, a wave 2, no deeper than 1200, and then we'll start pushing higher for our wave 3 of 3 to the upside, up and back above the resistance area, and would be well and truly on our way. So this is what ideally would like to occur. We are by no means there yet. We are quite oversold still, even with last night's negative price action. So prices are still overbought, I should say, on our divergence indicator. So that may still require some unwinding. Again, doesn't necessarily have to do it. But it would be good to see a little bit more unwinding here, and that may coincide with another drop down here to 1200. I need to reiterate though, this 1200 level is quite critical. If we get any deeper here, we may be just still in an overall corrective price pattern here, a larger corrective move to the downside, back down into potentially support, down into this where we've seen buyers previously, back down below this 1100 price zone, and maybe even a little lower. We still haven't tagged the typical 50% retracement zone off the March 2009 lows there, and this is what this larger retracement is all about, retracing into the typical area that we would expect. Now it doesn't have to get there. We've still labelled the overall upside move as corrective and a high degree wave B right here. Doesn't need to get to the 50% retracement zone, but while this is still occurring here and traction hasn't quite taken hold just yet to the upside, and we need it to sooner rather than later, but if it doesn't and we break down below 1200, we'll be questioning our immediate bullish analysis right here, and we may just be heading lower for weaker prices over the coming weeks and potentially early into the new year. Ideally though, as I keep mentioning, we are leaning on the side of the bulls, so we're looking at a subdivided wave 3 or C to the upside occurring here, and as I said, 1200 is very critical. Now if you have a look at, I've just thrown a couple of very simple moving averages on the chart. Don't normally look at these, but a lot of people do look at the 200-day moving average, and as you can see, prices are stalling right just beneath and on the 200-day moving average here, and this is something, an indicator to a lot of people that if we can get a break above this that sticks, then we may well be on our way for a sustained run to the upside. The other little moving average that I put in here is a 75-day moving average. Now you can look at this along with some other indicators in regards to just how the trend is placed. So anything above the 75-day moving averages could indicate that the trend is on the way up and reversing from a downside, and we have, as you can see here, even just looking at that average, although price action makes it very obvious, we've been in a downslide or a downtrend since the middle of the year, but this recent run higher off the October lows did break above the 75-day moving average. Tagged the 200, reversed, it's tagged it again and reversed, but what we're sitting is in between these two moving averages right now, one dictating that we are in an uptrend and the other dictating some confirmation of that if we break above. So right here we're just in a little bit of no man's land, and if prices did head down into the typical retracement area here for this smaller run high here, and that is the deeper side, 61.8% down to 1200, that is likely going to tag right on the 75-day moving average, and ideally, once again, we do not want prices to break below that, as that could indicate that the trend is going to reverse back to the downside again. So very critical here. We want 1200 to hold, and on the upside would like to see this wave 1 broken through at 1263, and then of course this more intermediate wave 1 or A high broken past at 1293 here, and if we can get a break past this, we should be well and truly on our way.